Welcome back to Investing Talk podcast.
Great to be back.
Today, we're focusing our deep dive on Anavex Life Sciences. We've gathered quite a bit of material research, updates, internal notes, and our mission today is to sift through it all.
Right. Cut through the noise.
Exactly. And highlight what really matters about this biotech company. We'll look at what they do, their recent financials.
Check on the clinical progress, definitely.
Yeah, that's key. And also understand the risks and, what's been happening lately.
Sounds like a plan.
And hey, if you find this valuable, please do take a second to subscribe. Give us a like, maybe drop a comment.
Yeah, that feedback really helps us shape these sessions for you.
It really does. Now, with a company like Anavex, the usual ways you might analyze a stock.
Like looking at profits, PE ratios.
Right, that standard toolkit. It doesn't quite fit the same way here, does it?
No, not at all. They're in a totally different phase. It's all about development, building for the future, not really about current earnings reports.
Okay, so let's start right there. Who is Anavex Life Sciences? What's their core mission?
Well, fundamentally, Anavex is a biopharmaceutical company.
Okay.
And their main purpose, based on everything we've seen, is developing new therapies, novel therapies.
And in what area specifically?
They're really laser-focused on a tough space, neurological, neurodevelopmental, and neuropsychiatric disorders.
Wow, so we're talking about things like Alzheimer's.
Alzheimer's, yes. Parkinson's disease, schizophrenia, Rett syndrome, other CNS, central nervous system diseases too.
That's a wide range within neurology.
It is. And there's even mention of potential expansion into things like pain management, possibly certain cancers down the line.
So their business today isn't about selling pills at the pharmacy counter. It's the development process itself.
That's exactly right. They are squarely what you'd call a development stage biotech.
Meaning?
Meaning their entire operation revolves around finding these potential drug candidates, doing the early research.
Preclinical stuff?
Yes, the lab work, animal models. And if that looks promising, then moving them into human clinical trials.
Which is a huge undertaking.
Oh, incredibly complex and very, very expensive. The whole goal is pushing towards eventual regulatory approval, maybe commercialization. It's definitely a high-stakes, long-game strategy.
Got it. So within that pipeline, who are the main players, the lead candidates we should know about?
The two that really stand out are Anavex 273. You might also see it called blarcamazine, and Anavex 371.
Okay, 273 and 371. What's the science behind them? What makes them interesting?
Well, the mechanism they're working on is quite interesting. They target specific receptors in cells, sigma-1 and muscarinic receptors.
And the thinking is?
The underlying idea is that by adjusting these receptors, they might help cells get back to a more normal state, restore what the materials call cellular homeostasis.
Sort of like resetting a system that's gone awry in the disease.
Kind of, yeah. Trying to address the fundamental imbalance at the cellular level. And for Anavex 371, the notes mentioned it showed promise in preclinical work against some biological markers of Alzheimer's.
Okay, aiming for something foundational. That makes sense. Now, you said it. For a company like this, the clinical side is where the story really unfolds. What's the latest progress there? What stood out?
Absolutely. The clinic is everything. For Anavex 273, specifically for Alzheimer's, a key point is the successful completion of its Phase 2A and Phase 2B3 trials.
Completion, so they finished those stages.
Yes. Reaching the end of those later stage trials is a significant procedural step. Doesn't mean approval yet, but it's progress.
Completed trials are definite milestones. Is 273 being looked at for anything else? Or what about 371?
Yes, 273 is also being studied right now for Parkinson's dementia and for Rett syndrome.
Okay.
And then there's Anavex 371. The big recent news, this was tied to their update on May 13th, 2025.
What was that?
They successfully completed enrollment for the Phase 2 clinical study in schizophrenia.
Ah, completing enrollment. That means they have all the patients they need for that specific trial.
Precisely. It means they can now move forward with the actual treatment part of the study and start gathering the crucial data.
Okay, another important step forward. Completing enrollment for schizophrenia Phase 2. Beyond these specific trial updates, were there other signs suggesting their approach holds promise?
Well, the preclinical data provides that foundation,
Right, the earlier work.
The research suggests their candidates, in animal models at least, showed potential to not just slow things down, but maybe even halt or reverse disease progression.
Across different conditions.
Yes, across multiple CNS indications in those models. That preclinical promise is really the why behind pursuing all these different human trials.
And it seems like they're getting some external validation, too. I saw a mention of funding.
That's a good point. Receiving grant funding from well-regarded organizations, like the Michael J. Fox Foundation, was highlighted.
That definitely adds credibility.
It does. Support from groups dedicated to specific diseases like Parkinson's suggests the scientific community sees merit in their approach.
Okay, let's shift gears a bit to the financials. You mentioned up front, biotech financials are different. Based on that Q2 report from May 13th, what does the money situation look like for Anavex?
Yeah, that report really paints the picture of a development stage company. As you'd expect, no significant revenue. Nothing substantial reported.
Because they aren't selling products yet.
Exactly. Their focus isn't on sales figures. It's on investing. Investing heavily in R&D to potentially bring products to market someday.
So with no real revenue, the bottom line must be about the spending, the loss.
That's right. For that second quarter of fiscal 2025, the net loss came in at $0.13 per share.
Okay, 13 cents loss per share. How does that compare?
What's interesting is that this was pretty consistent with the same quarter the previous year, suggesting maybe a relatively stable rate of spending on R&D, at least over that period.
A consistent loss? Kind of par for the course at this stage for biotech, I suppose. What about debt? Is that weighing on them?
That was actually a positive point highlighted. Anavex currently carries no debt.
No debt at all.
None reported, which is definitely a plus for a company that relies on its cash reserves to fund operations. No interest payments or loan burdens.
Okay, no debt, but they clearly need cash for that R&D engine. How much cash did they have?
They reported a pretty solid cash position. As of March 31st, 2025, they had $115.8 million.
Over $115 million. That sounds substantial.
It gives them runway, certainly.
Okay, so substantial cash, no debt, but operating at a loss because of R&D. How should someone trying to value this company think about the usual metrics, like PE or return on equity?
Yeah, that's a really crucial point to grasp. Because Anavex running at a net loss, it's not profitable.
Right.
Those traditional metrics like price to earnings, PE, or return on equity, ROE, they just don't apply. They're not meaningful right now.
Because there are no earnings.
Exactly. No earnings for a PE ratio and no positive return on equity in the conventional sense. The materials suggested that metrics looking at assets, like price to book or PB.
Comparing price to the company's book value.
Yes, that can be a more relevant way to compare early-stage biotechs against their peers. It's about assets on paper versus market valuation.
Okay, that clarifies why the standard playbook is out. So if profitability isn't the metric now, what financial aspects should people be watching closely?
The absolute key financial thing to track is their cash burn rate.
How fast they're spending that $115 million.
Precisely. The rate they spend cash, mostly on R&D, which drives that net loss. Understanding the burn rate gives you a sense of how long their current cash might last them.
And dividends are obviously not part of the picture.
No, definitely not. Any available funds are being plowed right back into developing that pipeline. Reinvesting in R&D is the priority.
Okay, let's zoom out a little. Put Anavex in the broader industry picture. Where do they fit?
Well, based on the materials, Anavex comes across as a challenger in the biotech world, specifically in that neurological disorder space.
Competing with the big guys.
They are, yes. They compete with much larger pharmaceutical companies that also have CNS programs. But Anavex seems to have a more focused, maybe niche strategy, targeting specific biological pathways.
Like the Sigma-1 receptor.
Right. And going after conditions with really significant unmet medical needs like Alzheimer's, like schizophrenia.
And how do the wider trends in biotech affect a company like Anavex?
Well, the whole biotech sector, especially anything focused on the brain, the central nervous system, it's under a huge spotlight right now.
A lot of interest there.
Massive interest. There's enormous demand for real innovation, for treatments for devastating conditions like Alzheimer's. Anavex benefits from that intense focus and investment interest.
What?
But it also means they face all the inherent risks that come with drug development.
Yeah.
Risks that apply across the whole sector.
Right. Speaking of risks, what were the main ones highlighted for Anavex specifically?
The primary risks are really baked into their business model as a clinical stage biotech. The number one risk is clinical trial failure.
The drug just doesn't work or isn't safe.
Exactly. The possibility that Anavex 273 or 371 or any future candidate might not prove effective or safe enough in humans, even if trials look good.
There are still hurdles.
Big ones. Regulatory hurdles. Getting approval from bodies like the FDA is a massive, complex process. And then, of course, there's competition.
Other companies working on similar things.
Yes, big pharma, other biotechs, all potentially developing treatments for the same conditions.
The material also flags some potential red flags, didn't it? Things often seen at this stage.
Yes, a few points came up that are important to be aware of because they don't have products generating revenue.
They need money from elsewhere.
They are reliant on external funding, raising capital to keep the lights on and the trials running until, if a product gets approved and starts selling. That reliance is key.
And that ties back to the R&D spending and the cash burn we talked about.
Directly linked. That high R&D spend means ongoing losses, burning through that cash balance.
So if they need more money before getting a product approved,
They often have to raise it by selling new shares of stock, which can lead to dilution for existing shareholders. Their slice of the pie gets smaller.
okay,
And the material also mentioned their stock likely has a high beta.
meaning it could be quite volatile.
Very volatile, yes.
Yeah.
Sensitive to news. The price could swing significantly based on trial results, good or bad, or regulatory updates.
That makes total sense when so much rides on those clinical outcomes. Shifting to recent events again, what news popped out besides the Q2 results?
Well, there was mention of conference participation. Their CEO, Christopher Missling, was set to present at 2 H.C. Wainwright conferences in May and June 2025.
Standard practice for biotechs?
Pretty standard, yes. It's how they engage with investors, analysts, and the scientific community, give updates.
And beyond conferences, what else was recent?
That May 13th update, besides the financials, it included that business update we touched on.
Right, confirming the schizophrenia trial enrollment.
Exactly. Confirming the completion of enrollment in the Phase 2 study for Anavex 371 in schizophrenia. That's a tangible sign of progress, moving a key program forward.
Were there any recent data presentations mentioned?
Yes. There was a presentation of some open-label extension data for blarcamazine. That's AVXL 273.
Okay.
This was at the ADPD 2025 conference.
ADPD, Alzheimer's and Parkinson's diseases?
That's the one. Presenting there gets their Alzheimer's work in front of the key scientists in the field. The data they shared apparently showed continued, quote, clinically meaningful benefits for early Alzheimer's patients in that extension phase.
So recent activity covers the financials, a clinical milestone with enrollment, and sharing some ongoing patient data. How do these kinds of events typically play out in terms of market perception for a company like Anavex?
Well, the specific day-to-day stock moves weren't detailed, but the overall suggestion was clear. These types of events, positive clinical updates like finishing enrollment, presenting encouraging data, even if it's open label or preliminary, conference appearances. These are the main drivers for development stage biotech.
They fuel a narrative.
They fuel the narrative and investor interest, absolutely. Positive news tends to generate optimism. One note even suggested that this kind of pipeline optimism was likely why the stock might perform okay, even while reporting a net loss.
Because the market is looking ahead.
Exactly. It's often betting on the potential future success, not the current lack of profitability.
Okay. So let's try and pull all these threads together now. What does this deep dive really tell us about Anavex Life Sciences at this moment?
I think it paints a picture of a company that's deeply embedded in the tough but potentially very rewarding work of creating therapies for major neurological conditions.
They're in the thick of it.
They really are. They've got a pipeline moving through trials, which is crucial. They have that solid cash balance and no debt. Those are definite financial positives, giving them breathing room.
Right.
But they are firmly in that R&D phase, operating with expected losses, facing the very real risks of trial outcomes going wrong, navigating regulatory paths.
Yeah.
That's all part of the territory.
And the recent news shows they're pushing forward?
Yes, recent events suggest continued momentum. They're hitting clinical milestones, they're presenting data, they're talking to the investment community, they're active.
And maybe that's the real aha moment here. For a company like Anavex, the conversation isn't really about revenue or profit figures like you'd see with an established company.
Not at all.
It's almost entirely about progress in the clinic, upcoming data, potential breakthroughs. Those are the key discussion points, the things driving perception.
That sums it up perfectly.
Yeah.
We see Anavex as this development stage player targeting huge needs in neurology, showing progress, financially stable in terms of cash and debt, but operating at a loss with all the classic biotech risks.
It really highlights the unique landscape of investing in this sector.
It absolutely does. You're weighing this immense potential for future breakthroughs against the current financial reality and the inherent uncertainty of biology and clinical trials.
Which leaves us with a pretty potent final thought for you, the listener. Given Anavex's focus on conditions like Alzheimer's and schizophrenia, where the unmet need is just vast, how much does that potential societal impact, the hope of a real treatment, weigh against the financial metrics and the risks we've laid out today?
Yeah, how do you balance that potential human impact with the investment case? Definitely something to ponder.